Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories at 1:30 p.m. Midcaps outperform large peers on the last trading day of the year. Metals, realty lead the gains in the session, while financials and FMCG lag.
Craftsman Automation snaps up 76% stake in peer Dr. Axion for 375 crore rupees. The stock surges up to 11% intraday following the announcement.
HG Infra surges after bagging a project worth nearly 1,000 crore rupees from the NHAI. The project will boost its hybrid annuity mode portfolio.
Bullish outlook gives Techno Electric a fillip. The management tells CNBC-TV18 it could record a revenue growth of 25 to 40% in the next financial year and even grow at these levels in FY24 as well.
And Punjab and Sindh Bank gains after rolling out 3 co-branded credit cards in partnership with SBI Cards.
Good afternoon. Welcome to Midcap Radar. Well, those are the top headlines that we are tracking on the last Midcap Radar of this year as well. But for the markets, not much action really, Reema. We are actually range bound today. Nifty, after being very volatile, continued to stay in the green. So it's an 18-point uptick on the Nifty. And the Midcap side of things, they continue to outperform. So 0.8% higher on that one. Bank Nifty is the one which is a disappointment today. But again, that one is down 0.4%. We do have some buying coming in some of these PSU banking names yet again. Metals too are doing really well, but holiday mode is on, Reema.
Absolutely right. But look at the way the mid-caps are moving right now. In the last 30 minutes, you've seen the mid-caps taper off a bit, come off from the highs. But the mid-cap index has gone strong and it's gained and perked up in trade. There you have the mid-cap index up nearly 1%. But let's get to the individual stocks which are buzzing in trade today. This is mid-cap movers. Vivek joins in.
Well, good afternoon. It does appear as though, the mid-caps have decided to end the year on a very strong note. A lot of stocks today, continuing to hit their fresh 52-week high or the 2020 high that we could have a look at. Apollo Microsystems, this particular stock at a fresh 52-week high today, up 75% in 2022. Apar Industries up over more than doubling, actually 135% up, again at a fresh 52-week high. Solar Industries, Gujarat Pipavav Port, as well as NACL Industries today at a fresh 52-week high. Moving on to some of the stocks that are seeing very strong volumes. First on our list is Stovecraft. Now, very interesting over here, this particular stock has seen continued selling pressure in the last 8 to 10 trading sessions. What we do understand is that most of the selling has been absorbed today, and on very strong volumes, the stock has managed to bounce back from the day's low. So we'll keep an eye out for this particular name, but on very strong volumes has moving up. New India Assurance, again today, Astra Micro and Anantraj, all of these stocks are moving up with good price action and volumes as well. On the other hand, some of the stocks that are losing, KFin Tech, it had a weakest listing yesterday, continues its down move. GR Infra Projects, Rainbow Medical and Varun Beverages, all of these stocks are seeing some profit booking in the trading session today.
Okay, all right, Vivek. Thank you so much for joining us. So those are some stocks which are in focus. It's time to get a technical check on the markets. Himeen Kapadia of KR Choksi Securities is joining us now. Himeen, good afternoon. Thanks a lot for joining us. Well, what are the charts suggesting now? Some consolidation or we'll see sideways moves from here? Himeen, can you hear me?
A very good afternoon to you, Sonal. Thank you for having me on the show. I think, yes, a little bit of consolidation seems to be on the cards, Sonal. Like you said, holiday mode, lack of action. We've seen a bounce back and we are, 18.3 is strong resistance. We haven't touched that from an intraday point of view. So, yes, and there is some lethargy. FMCG seems to have slipped into a corrective mode. IT hasn't performed that well. It has. Banks are a bit mixed. So, frankly speaking, we seem to have stagnated just a wee bit. I guess it's basically for the end of the year considerations, nothing else. But yeah, a bout of consolidation seems to be around the corner.
More consolidation in store for us. Hemeen, good to see you and thank you very much for joining in. What about the individual stock recommendations?
Good to see you too, Reema. Individually, a couple of stocks which sort of look a bit promising. Firstly, there's a buy call on Aarti Industries. It's virtually fallen off a cliff from 805 to 590. Currently, firstly, the stock is oversold. Secondly, some of the daily mechanical indicators are giving a crossover buy. The stock is on the verge of forming a higher top, higher bottom. So buy on Aarti Industries at 610, stop loss 595, target 640. Secondly, a buy call on ICICI Lombard General Insurance. Now, it's a very it's been a consolidation, Rima. 22 trading sessions and counting. We've been moving sideways in a range. The script is on the cusp of a breakout. It's not yet broken out, but the technical indicators, and after 4 weeks of multiple attempts, I guess it's just a final push through away from breakout. So buy on ICICI Lombard at 1245, stop loss 1220, target of 1295. Rima.
Okay, all right, Himeen, thank you so much for joining us and wishing you a very happy 2023 as well. Have a great weekend ahead as well. Slip into a short break. On the other side, we'll be joined by D. Ram Reddy, who's the MD at Balaji Mines, to discuss the outlook for 2023 as well. Welcome back. Let's talk about Balaji Mines now. In a recent BNK note, they pointed out that yes, there could still be some supply side issues as far as the chemical industry is concerned. We have spoken to a lot of them. They did indicate that it may be related to a particular chemical, but let's get in more about the chemical industry and about Balaji Mines as well. D. Ram Reddy, MD at the company, is joining us now to discuss the business prospects and the demand outlook as well. Mr. Reddy, good afternoon. Pleasure speaking with you and wishing everyone at Balaji Mines and you yourself a very happy 2023 as well. Well, it's the last trading day or the last weekday of this year. I just wanted to understand, we have seen a lot of ups and downs as far as the supply side and the demand side concerns for 2022 are concerned. What is the situation right now as far as demand and both supply is concerned? Because some notes were suggesting that yes, supply side issues still exist. Is it a particular chemical, a particular commodity, or is it an industry-wide phenomenon?
Unfortunately, end of the year, I think I can say it is little bitter for the entire pharma API industry. We have seen a lot of pressure in the pricing also, as well as raw material prices also. The main thing in the last 1 month, we have seen the raw material prices like methanol have gone up. But I feel it's temporary because some of the plants are down in Iran and other places. That has given impact all over world. So probably we expect in coming quarter it should go into the positive, even the pharma API, whereby all the intermediate and chemical industry should go into the positive. As far as our company is concerned, we have given the guidance of the total revenue around 2,400. We are right on the track. I still give the same guidance for the year-end on consolidated basis. The only thing is there will be some pressure on the margins. We used to say always the EBITDAs will be 22, 23. We still say that 2% here and there, we should be in a position to maintain that EBITDAs on the consolidated basis.
Okay. So just one confirmation, you are saying that EBITDA margins could be lower by 2% from what you had guided earlier, 20 to 23%, but could be lower than that.
If it recovers in the next 3 months, it will be same on the 22 to 24%. Otherwise, 2% here and there, it will be there.
Okay.
Maybe 20, 21%.
Got it. Mr. Reddy, just to understand this muted demand from pharma in a greater detail, what is leading to it and what's the extent of decline that we've seen in the pharmaceutical orders for you, for instance, in the API orders, etc.? And how much would the pharma segment contribute to your overall revenues?
See, our overall basket contributes almost 58 to 60% only pharma API industry. And current position in last 1 quarter, we have seen almost pharma industries down by 40%, what I can see. And this is because there are 3-4 reasons. Reason 1 is the gas prices, whereby the raw material prices and intermediate prices were not stable because of the war between this Ukraine, Russia. Still, it is continuing. And secondly, the China is not doing well because of the matching raw materials for the various companies are not getting. That is another reason. And some of the major raw material prices, that bulk chemicals, where the raw material like methanol and all, which are related to the gas prices, is also not stable. These are the main 3-4 reasons pharma API is not doing well. And going forward, we expect, we hear from the European countries, their gas position is stable for past 3-4 weeks, and we expect coming quarter will be better for them in the gas point of view, and which will turn into the positive for their manufacturing sector. And in turn, even for the methanol price also will improve in the coming quarter. So whereby we expect the entire pharma API should go into the positive, and in turn, the chemical and pharma intermediate industry also will go in a better position than the current.
Okay, so take your point. It is the pharma industry which is putting some pressure as far as demand is concerned, and that's of course the bigger chunk for your revenues as well. You briefly mentioned and you spoke about what's happening in Europe as well. For the entire Indian amine manufacturers, 45 to 55% of export revenues come from Europe alone. So now that you're talking about some pressure in the European markets, what kind of impact do you think it will be? What is export as a percentage of your revenues, and how much from here is actually to Europe?
See, for us, because our basket is different, unlike other companies, it's not given much impact, only 1 or 2% impact on the revenue point of view. Only margins have gone down by 1-2%. EBITDA margins are down on consolidated basis. But otherwise, in other standalone, suppose if some industry is only depending totally on the pharma API, they are impacted very badly. But for us, it's very, very little impact is there because of the multiple sector use is there. We have other sectors are doing well, like agro. We have 20-25% contribution to the agro. Oil drilling wells is there, and textile is there, and dyes, colors. They are doing fairly better than the pharma API, where we are doing reasonably good.
Okay.
Okay. Mr. Reddy, recently the DGTR recommended an extension of the anti-dumping duty on monoisopropylamine. Does this benefit you? Do you manufacture it?
No, we don't manufacture, but indirectly it can be said as a matching raw material. Where it is going, our product also goes, so that will benefit us indirectly.
So do you think you can raise the prices for your own product? Or how will it benefit you all?
No, the availability will be more at lower price. So whereby we may get the benefit because our raw material also goes there. So indirectly it will benefit.
Okay, so that is about the demand side and what will happen to the revenues, but you do have a lot of capex and expansions coming up as well, and that's what the street is looking forward to. DMF utilization around 50%. You had spoken about, you know, increasing it by the end of the year to around 70 to 75%. What is it currently? And also you plan to undertake capex for a new product and butylamine. When will that commercialize?
See, recently we have commissioned the DMC and the propylene glycol, which plant is running well. Only these sample approval is going on with various pharma industries. We expect that in coming quarters that will go in full swing, which we commissioned recently. And methylamine plant, which is in the top priority, which will be commissioned by the starting of the next financial year. And butylamine, we are just expecting for the environmental clearance from the government of India, which is at final stage. The moment it comes, it will take hardly 6 to 8 months time to complete the plant construction to come into the production. After that, again, as I said, the acetonitrile with the new technology that is also in the on table. We have not stopped any expansions because of this slowdown in the pharma. Everything is on same speed what we have done. We expect this is a temporary, whatever slowdown is there with the pharma. And as you asked for the DMF, yes, we have some pressure. We are fighting with the government. We are requesting the government of India for support is anti-dumping. We got the pressure on the pricing. Dumping is again happening from the China and Saudi Arabia. We have requested the government of India to intervene again recently also. And we expect some support from the government in the coming quarters.
Okay. One final question, sir. In 2023, should we expect a listing of Balaji Specialty?
That I cannot say because it is with the DRHP level. We have some restrictions. You will hear in the coming quarters, but definitely in our next show, we will understand where it is.
Okay, all right, Mr. Reddy, thank you so much for joining us today and explaining everything that's happening with the company and the chemical sector in general in detail. It was a pleasure speaking with you. Thanks a lot for joining us. That's the word coming in from Balaji Mines. For now, we'll slip into a break. On the other side, in our special segment, Midcap Spotlight, we'll focus on cement pricing trends on the back of an MK Global note. They have highlighted what's happening here. Stay tuned.
Welcome back. Let's get to the Midcap Spotlight. And in that, today, we're going to be talking about the cement sector. Now, MK Global has come out with a report early in the morning where they've done some channel checks about cement pricing. And here's what they have to say. The average pan-India cement prices have come down by 1% on a month-on-month basis in the month of December. They're saying the price decline was steeper in East and South, a decline of 2% on a month-on-month basis, while it was flat in the other regions. But on the whole, a 1% month-on-month decline in cement prices in the month of December. But this also, remember, comes on the back of a price increase that we had in the prior 3 months. That is, in September, October and November, cement prices had gone up, and therefore we've seen a bit of a retracement in the month of December. On the whole, in Q3, cement prices are up by 2 to 2.5%. So that is a positive. When it comes to volumes, they've indicated that industry volumes are likely to be flat to marginally positive in the month of December. And also another word on the cement prices. As I said, September, October, November, cement prices went up. According to channel checks, it's come down by 1%. But cement companies are also planning a pretty large price hike in the month of January.
Okay.
So they are contemplating a price hike of 10 to 20 rupees per bag across regions in Jan 2023. Of course, it remains to be seen. The plans are yet to be unveiled and whether this gets absorbed by the market. But the companies are planning to attempt a price increase. But on the whole, in the current quarter, according to MK, the cement industry's profitability is likely to go up. One, on the back of higher cement prices, because on an average, Q3 cement prices are up 2 to 2.5%, and operating costs peaked out in Q2. So when you compare the operating costs in Q3, it will be lower. So therefore, operating profitability for cement companies will look up in the current quarter. So that's the takeaway.
Okay, so interesting takeaway there. That's all about the cement industry. Thanks, Reema, for that. But moving on, 2022 was a year of reckoning for the box office. Bollywood faced one surprise after another as films with a pan-India appeal smashed records and big-ticket mainstream Hindi films failed to rake in collections. Truly, the year the box office came of age. Vaishta rounds up all the hits and misses of the year that was.
After 2 consecutive years of clouded growth, 2022 finally brought some sunshine to the cinemas. The start of this year suffered the lack of quality content, leading to low footfalls at the theatres. These led to a dent in box office collections, supported by Indians shifting preference towards consuming content on OTT apps. Even as Indian moviegoers hit the theatres, footfalls at leading multiplexes remained below pre-pandemic levels. But Hindi films like Gangubai Kathiawadi and Alia Bhatt Starer started pulling the crowd back into the theatres, clearly spelling out that quality content is supreme. This movie made solid collections of 129 crores. Other blockbusters like Kashmir Files, RRR, KGF Chapter 2 had longer run times at the theatres. While movies like Bhool Bhulaiya 2, Thor, Brahmastra, Drishyam 2 and Avatar were the big crowd pullers. Although the number of Hindi films crossing 100 crores at the box office this year was less than that of 2019, the pre-COVID year, also because quite a few released on the OTT platforms. But not everything was shining bright in 2022. We also saw some major disappointments from films with high expectations like Aamir Khan starrer Lal Singh Chadda, Vijay Deverakonda's Liger, and the Akshay Kumar starrer Raksha Bandhan. Each of these movies managed to clock about 20 to 60 crores as their lifetime collections. But as we end this year, Avatar: The Way of Water was the much-awaited movie and performed just as expected. Opening day collections at 41 crores were the second highest this year, only after KGF Chapter 2. Elara Capital expects the movie to clock 500 to 600 crores. Hindi and films which are dubbed into Hindi saw a total box office collections of 3,660 crores until the 22nd of December this year. That is thrice the previous year's number, but at 65% of the pre-COVID year 2019. A revival in footfalls in December has definitely boosted this number in 2022. This year, multiplex stocks have also seen some good momentum when compared with the broader markets. In fact, PVR and Inox have trained their focus on opening new screens and offering unparalleled movie-watching experiences. So as the curtain comes down on this year, are you heading to the theatres this weekend?
Thank you very much, Vahishta, for that very interesting recap of the year gone by. But as the curtains come down on Midcap Radar, the markets have taken a bit of a tumble. The Nifty and the Sensex are currently in the red. The Nifty is down 90 points from the peak intraday level. Midcaps are holding up in the green, outperforming, up 0.7%. But again, a little bit of a slip from the top. Out of time on this show, your stocks when we return.